Your Naira is losing value every single day. And why do you keep investing only in Nigeria? So today we'll be discussing the question everyone is afraid to ask. Is it still better to be investing in the NGX or should you invest abroad? Welcome to Clockwise. My name is Providence, and today's conversation is comparing the dollar investment and the Naira investment. I have my analyst here, my in-house analyst and researcher with Francisco Alpha. Now, with a resounding virtual round of applause, welcome, Mr. Kandem. Welcome to Clockwise.
Thank you very much for having me.
How's it been?
It's been good.
We're expecting inflation to actually go down in a few months from now.
Yeah.
But as it stands now, let's get straight to the conversation. Now, from what you have experienced so far between comparing the dollar to the Naira, what does it mean for people that are investing only in the Nigerian Naira or the Nigerian economy?
So, for people that are investing in the Nigerian economy, I think that is something I would not advise at all.
Okay.
Because you are exposing yourself to a lot of risks. It's not just currency risk. So one of such is currency risk. I know that a lot of things have happened, which has actually pushed has made Naira a little bit stable. You are looking at the CBN says our reserves have totaled $52 billion with 40 billion as unencumbered reserve. Then that is a huge amount that you can use to support a lot of effects, and that's because of that has been largely because of the price. The oil prices have remained highly above benchmark. Number one, number two, the oil. If you look at production has moved beyond from the 1,400 we're doing. Now we are doing 1.4 million barrels per day. Now we are doing 1.8 million barrels. So if you look at some of those differentials, then you see why we have easily racked in so much in terms of USD. And then you also look at the fact that before now, essentially before Dangote came on stream, we're spending huge amounts of money. Sometimes up to $35 billion just to import fuel, that we use locally. But today, you realize that, Dangote has even produced much more than what we need domestically and isn't exporting. That's number one. And then you have the fertilizer plant. I'm told that only 15% of that is consumed locally. So 85% is shipped out. If you look at jet fuel, Dangote in April of this year was the largest exporter of jet fuel around the world, literally exporting to the US. So these have all been factors that have brought in so much FX liquidity or FX itself and help to stabilize the Nigerian Naira.
Let's assume, because I could remember in one of our sessions, you advised diversification economy.
Yes.
Like you don't just invest in just a single economy. Now, let's assume somebody that wants to invest abroad, let's say US, UK. What are the legal ways to actually invest from Nigeria, and what platform do you recommend? Okay,
so let me before I go to that point. So I was trying to tell you why it looks like the Naira is appreciated. It looks like investing in the Naira is good because if you look at it, 57% year to date on the NGX. And then if you look at in dollar terms, because of the fact that Naira has been appreciating against the dollar, while the NGX has also been outperforming. So you have that in dollar terms, NGX became the fastest growing, in fact, the highest yield for the year. However, like I said, that as a portfolio manager myself, and maybe speaking generally for investors, it is strongly advised that you diversify, not just within an industry, but you are diversified across economies, because you are also diversifying to the US market, for example, allows you to hedge against currency devaluation. You are actually trying to reduce your currency risk, and then you're also trying to gain exposure to the deepest capital market in the world. But if you want to do that, there are different platforms that have allowed. There are platforms that allow you to invest in those in the US equities, for instance. A platform that comes to mind is is like bamboo.
Okay.
You can literally, all you need to do, you deposit your money, Nigerian Naira if you have it, and then convert it to US dollar. I mean, though you would also notice that the exchange rate is a little bit, sometimes the arbitrage could be in excess of 1,000, of 30 Naira.
Okay.
So for example, if the market is giving at 1,380, bamboo could be giving at 1,410. So, but that in itself is, so I mean, it's something that you can look at. Then, but if once you get that, you turn it to US dollars, and then you can buy assets as well.
I want to know, how realistic is it for someone that, let's say, has a total of 500,000 Naira now, and the person want to invest overseas, like abroad, and what are those hidden charges, those hidden costs that people don't know about?
Okay, so for example, if you are using a platform, number one, when you are depositing, if you are depositing on bamboo, you are going to be charged 150 Naira.
Okay.
I'm using, it's not as if I'm pushing pushing for bamboo though, but I'm just using a platform.
I know you like bamboo.
I mean, I'm talking about a platform that is easy for Nigerians to really set up accounts. And by the way, bamboo, one of the challenges we used to have was their customer service was terrible, very terrible. I think they have done something in that regard. I got a message a couple of days ago. But you just you are going to be charged 150 Naira if it's 150 Naira if you are depositing 500,000 Naira, and then so that's the first charge you get. The second charge you get is that you're going to be charged the arbitrage I mentioned. You might pay more. Sometimes it could be 30 Naira, 40 Naira, sometimes 40 Naira above what you have as the rate that you can find outside. Then that's one. Then the next one is that so you have to eat that cost too. Then the next one is that when you are placing a trade, you're going to be charged 1.4%. Yeah, 1.4% for placing that trade. So if you put everything together, you might be looking at 2% of your money.
No, I want to see, does investing in, let's say, investing overseas, does it actually mean that you should abandon the NGX? Or is there a way you can actually do both of them at the same time?
So that is what I advocate, and I'm going to spend some time to talk about this. So when you look at investing, and by the way, I do that. Clients that speak to me, I tell them, listen, you want to invest in the NGX and also invest in the US stock market. So the way it works is we have two primary vehicles. So we have a fixed income market, the NGX fixed income, you have the NGX equities, you have the US fixed income, you have the US equity. Let me start with the NGX fixed income. The NGX fixed income has been very, very, very attractive. If you look at currently, MPR is at 26.5%. The bonds, the average yield is about 17.5%. But let's just leave it at 18%, because if you look at some actually get you as high as 19%. I'm not even talking about the actual yield, but let's look at 19%. If you look at 19%, for starters, that's attractive because the arbitrage you have, inflation is about 15.4%. So if you look at 19%, that gives about 3.6% in terms of the arbitrage, the margin. Then, but in the US, you have 4.5% on the 10-year, for example, 4.5% on the 10-year. Inflation is sitting at 3.1%. That's about 1.4%. So if you look at and NGX kind of gives you some higher, so the carry trade is still very positive in Nigeria. If you look at in Nigeria, by the way, so now that's fixed income. Now, what are we looking at? Now we are looking at the fact that you can actually be getting this. You can lock in 19%, or a real yield of 22%. You can lock this in for the next 10 years. If you look at the government is not very excited about selling 30-year because the rates are high. It's not economical for you to lock yourself into that kind of commitment over a 30-year period. But even the 10-year yield, you can lock in 90% or 22% real yield for the next 10 years. And now remember two things. Number one, you are getting this coupon on a yearly basis till maturity. Number two, if inflation terms, then we're looking at the fact that the CBN's MPC, Monetary Policy Committee, might decide to lower rates. Projections, analysts believe that this might come around on the November meeting. I think September meeting is going to be an academic exercise. So we're looking at November meeting. If that happens, then what you would have is that yields will come down. Yields will come down on both short-dated and long-dated instruments. What do you think will happen to a bond that was locked in at 19%? The price will go up. And though you can actually cash in terms of from capital gains too. So both capital gains and yield and coupon, you are going to make so much from Nigerian equities at this point. If you compare that to the US, I mean, you look at 30 years. For just before coming to the studio, it's I think it's about 4.21, 5.21% for 30 years. That is still, if you look at it from. And by the way, again, we are having a very serious challenge around inflation in the US. We are still not sure that it is going down, staying down. So if we were at 3.4 and then we went down to about 30 basis points to 3.1. Now there's a very high chance that given the high debt profile, I mean, we have now clocked $40 trillion in terms of US debt, and then you have the issues around in the Middle East. There's a very high chance that US inflation might remain either very sticky or might even be ticking up. If it takes up, the arbitrage becomes the margin becomes almost pales into insignificance, because if it takes up to like 4, and then even if you set out a 30-year, so you are only having just 1.2% in terms of your arbitrage, in terms of the margin that you have. So 1 point, and then Nigerian fixed income drops to like 14. And then you have already locked in 19%. You know what that means? You are looking at 5%, a whole 5%. So the carry trade opportunities still exist so much for the Nigerian fixed income. Now let's go to the equities. If you look at equities, I'll be a little bit kind of reserved, because if you look at equities, you look at where the NGX has been. NGX has literally been hovering around the whole of 2025 return. So, but I still believe there are some names that are still being undervalued. I still believe that even at this 47%, we are seeing a lot of investors take profit. Some of them are actually moving into fixed income as a transition towards getting back to equities, but for the Dangote refinery. So I believe that a lot of people that would not be able to get into the Dangote would still have to return their capital back into the fixed income market. And then that's number one. Number two, if inflation is going to tame down, as I expect it's going to tame down, or we're going to be tamed. So what you have is that the MPC might decide to drop rates. When they drop rates, the fixed income market becomes less attractive, and so capital will rotate back into the equity market. So if you look at it, in terms of equities and fixed income, I mean, you have something very good going on for the NGX. For the US for me is access to deep capital markets. US for me is access to a diversified diversification across geographies. Because I mean, if you look at US companies, most of them are companies that actually invest around the world. So you will not want to restrict yourself to companies, in Nigerian companies that have very, very, very skeletal offshore presence, or very skeletal global presence. Rather, you want to invest not just in Nigeria, especially if you've been a long-term portfolio, you want to invest not just in Nigerian companies, but also US companies. A lot of those companies have presence around the world and have customers around the world. If you look at names like NVIDIA from China to Europe to, you name it, to even the US, the NVIDIA has customers around there. You look at other names. So you by investing in those US companies, you are literally investing in a global economy. So for me, I think that combination for a fixed income and for equities, I would lean more towards doing. I would do Nigerian. So if I'm even to do the figure, say I have 100 million, 35% will go into Nigerian equities. That's. Okay. In fact, 40%. I mean, I'm a young guy, and especially if I'm talking to someone who's in his 30s or maybe in his 30s. Let me speak that way. Especially if he's not married, 40% at least will go to fixed income, to Nigerian equities. Then 20% will go to fixed income. That is already 60 million is gone. I have 40 million left. Out of that 40 million, a whopping 25 million will go into equities, US equities, and only 15% will go into fixed income US.
Now, let's talk about moving money abroad.
Yes.
I feel that there are other risks that are involved that investors may not pay attention to when it is early. Maybe they actually get to know about it when it is too late. What are those risks involved in moving money abroad?
Okay, so the way I do it is a bit different. So there's different ways we can move money abroad, but the thing is that
What are those risks involved?
when charges, if you want to repatriate funds outside Nigeria, there are different
investment purposes.
For investment purpose. I'm going to tell you how I do it.
Okay.
Then I'm going to tell. I mean, you might not want to do the way I'm doing. I've had experiences. I've had situations where I had to pay insane amount of money just to move a certain amount of money abroad.
Yeah.
But for me, I'm a young person that is very enthusiastic about the crypto. So I move most of my funds using crypto.
Okay.
I'm telling you, and I'm going to pay. I mean, if you use the traditional system, you can pay as much as to move $100,000, for instance. You can pay as much as $2,000. I'm telling you, you can pay as some. That is if you are very lucky, you know. So, but for me, I can actually move $100,000, and I pay just maybe at most $2. At most, I'm paying $2. Yeah, using crypto, and the stable coins are legal tender now. They have gotten legal by the Genius Act. Stable coins have gotten legal status. You can literally accept, companies in the US can actually accept stable coins. So, and there are rails. By the way, if I'm transferring that money, maybe through maybe MoneyGram or through Western Union, which is kind of. Even, let's say I'm even doing that, then I'm going to have to, apart from the huge fees I'm going to pay, something I can even pay up to 5% or even more. It will take time, 3 days. Imagine if I spotted an opportunity I need to take advantage immediately. What do you think will happen? I will have to, of course, I will lose the opportunity. Investment opportunity can die in a very short time, really. So rather, imagine, here is what I'll do. I'll just change it to crypto, and then push it out there, and then change it back to fiat.
Okay.
And in doing all of that, like I told you, it will cost me very, very, very little. That's number one. Number two, also this allows you to, like I told you, I take most of my all the loans I take against my portfolio, both for me and for clients that are educated enough to approve of such. It's actually in US dollar. Because if you look at if you're borrowing in Nigerian Naira, you'll be paying somewhere around 30%, north of 30%. But if you do in US dollar, you're going to be paying like 3.8%, which is even less than. Think about it. It's less than the US the 10 year, the US 10 year. So which is roughly around what we call the Fed target range, which is what a bank pays overnight for borrow money from another bank. So that is the least you can actually get, and so that is. Crypto allows you to take advantage of these opportunities. So you can move funds around. Obviously, legitimate funds. I do a lot of KYC, so I'm not moving funds that are illegal funds, investment funds. But by doing that, you actually reduce. By a long shot, you reduce the taxes, not taxes though, the fees you pay, and then you can do it lightning fast. I told you of an experience that I had where I had to I had to intervene. One of my investors had to push funds, a huge amount of funds out, and then he had to do that before 12 noon the next day. So you look at even we talk about the T+1 settlement in Nigeria. One of the biggest challenges for T+1 settlement in Nigeria has been moving funds, moving from an investor, moving through global custodians to local custodians to foreign exchange market. All of those things. That's even why the SEC had to move the settlement time to 5 p.m. just to see how they can accommodate the foreign portfolio investors. My investor, my client, actually had to move that funds and have it settled in the US on or before 12 noon the next day. There was no way we could do that. The traditional payment system said 2 to 3 working days. He did not have to today. He had to make that, and this decision he made it 4 p.m. the day before, and needed that funds to arrive by 12 noon. I told him, okay, so let's do it this way. Your funds will actually arrive in less than 30 minutes, and it happened. Okay. In less than 30 minutes, the funds arrived. So there are new technologies that are allowing us to move funds and then take advantage of investment opportunities before they die.
Now, let's look at the US first of all, because I know that's your market. The US market is your market. Now, what are those investment opportunities that are currently available for anyone to invest in, let's say from Nigeria?
Okay, so here is the deal. We've seen something. We've seen a movement away from AI infrastructure build out, and the reason is this: a lot of investors are beginning to think. A lot of hyperscalers are actually going so wild and far. If you look at their capex projections, investors are having such a hard time justifying this huge investment. You have companies talk about over 200 billion just in capex for this year alone, and all that. And you need to see how literally almost all the Mark 7, literally almost all the Mark 7, all the hyperscalers have gone to the market to borrow issuing bonds, to raise capital to invest in their AI infrastructure build out. Now investors are beginning to kind of have some knee-jerk reaction over the possibility of that of this huge investment actually bringing the desired returns. So you've seen a migration away from, and then also the fact that the treasury has been in fact the US debt has hit 40 trillion, and then investors are beginning to really sell US treasuries because of fears that this might not be manageable at the point. Because if you look at how much the US is using to service its debt now, it's way more than what they are spending on defense. So, and like I told you, by the investors selling even from long to short to long dated instruments are being sold. When they sell that, the price goes down, of course, and you know what happens to the yield. We heard Scott Bessent, the U.S. Treasury Secretary, talk about investing, buying the Treasury buying bonds, just as a way of bringing down the yield. But I mean, so investors are like rotating into that. They are kind of leaning away from from most of those bond sensitive investments. They are moving into things that are. I mean, if you look at Bitcoin. Bitcoin has, in just a week, Bitcoin moved from 62,000 to over 80,000. Because if you look at the fact that so how the Japanese yen was bailed out. So these are things that make people to say, we can actually print these things out. So of course investors will run to hard assets, and one of which is Bitcoin. That's why you see even treasury companies like MicroStrategy, Ethereum treasury company like BMNR, they have exploded. BMNR, for example, has done more than up to almost 40% in just 1 week. So that's where the attention is going now. Okay. You have, but again, for me, I still know that the AI story is still valid. NVIDIA has not, declared for second quarter yet. If you look at even some names like Micron, like most of those AI behemoths have not really, made their calls yet. So I believe that will rejig. Will bring back strength into the equities market. Investors, at the time, what you tend to have is that the fears show up in the market, and people are like, okay, are we sure this will be justified? And before you say Jack Robinson, a particular AI company calls out and it's a blowout quarter, and then you see the interest coming back to the market. So I think for me, this disinterest or this gradual shift away from AI, it provides an opportunity for people to to get back into the name. Because if you look at like a name like Micron is still up at this, even at current price levels. Micron is still up over 200% year to date. So that for me is something that is quite outlandish. So I would want to see a retracement in these names so that some people can enter.
Okay, now we're going to round up with the Nigerian market. From what you see so far, you've seen so far, what are you projecting for the third quarter on the NGX?
So third quarter for the NGX, for example, of course, you know that a lot of buzz is going to happen around the third quarter. I mean, we are actually in the third quarter. You meant to say the fourth quarter. Okay, fourth quarter. Yeah. So what I'm looking, I mean, third quarter still extends in September, and September we are expecting the buzz around. I mean, if Dangote lists in September. We are looking at either September or October, but if Dangote lists in September or October, you are going to have a lot of buzz. But remember, some of the structural things around the current drawdown in the NGX. When I mean drawdown, it's not as if, I mean, from the highs, retracement from the highs. It's because I had told you something. I said investors are trying to get resources, dry powder, to actually get exposure to Dangote refinery. So, and then you also have liquidity demand. I mean, schools are resuming, and then some investors that might, let's say,
financial,
liquidity demand, will need financial finances, might actually exist some position to be able to do that. But for me, I think that if FTSE, which I believe, FTSE by the end of this month, they should tell us whether or not we are coming back to the frontier market index. So if that happens, I think that's a tailwind. The Dangote will also be a tailwind because, I mean, it's like a rising tide that lifts all boats. So if you have many people coming to the market, I mean, that buzz will get a lot of people, a lot of funds. Then if you look at what has happened to the OMO has moved from, look at what was offered was 20.3, but as I speak with you, it has contracted to about 18.
You actually said that.
I told you. So that would make the market that market too. So that what that means that when the CBN is doing the next auction, then they might not be offering as high as that 20 anymore. So what happens is that investors will begin to when the market shrinks in terms of the yield, it's no longer as attractive as it were. Investors will begin to think about rotating back into equity. So I think Dangote refinery, I think FTSE Russell if it happens, and I think the contraction. If you ask me, if September numbers show up, and then you have inflation taming down, you know what that tells you? It tells you that the investors will know that there's a very high chance that by November meeting we might have a rate cut, and then of course the market always prices forward. So what you expect to happen is that investors will know that yields will come down. So they will want to rotate. Either some of them will want to lock in these yields, or some of them will want to rotate into the equities markets where they can get a higher yield, especially something that affects
do you see that the depth of the Nigerian market, the NGX, will actually will still be going back negative?
I mean, in terms of with the retracement, I mean, I still believe that there's still, some slight more pain down the road, and here is why. Like I told you, September, schools, we are in holidays now, so, like I told you, the two things that would really bring a lot of pressure would be serious rotation out of equities, out of some equity positions into Dangote.
So the retracement will continue?
So the retracement, I mean, Retail have not started retail have not even started accumulating for Dangote yet. So you are going to have a lot of people say, I'm sitting on Facebook. I think I'm up to 100%. I'm trimming from my position to
So as an investor now, is that an opportunity or?
Yeah, I mean, like I told you, I've always said it over and over again. For me, it's all dislocations. Some of the names that you're hearing, like GTCO, like Zenith, you have not heard anything because they have not announced their results. Yeah. So everything you are thinking of now, the latest you can even do, talk about their earnings ratio, their PE ratio, you're still talking about Q1. Yeah. So imagine if they have outperformed in Q2. Nobody knows until the audited results show up. Now, if you are basing on their Q1 performance, then that's why that enthusiasm is not there. But if these names announce, then we expect the people to really know where they really are. So, but if you still see a dislocation in these names, even after such announcement, then it tells you that it is a buying opportunity. So, I believe that contraction, dislocations in some of these names, for me, would be a buy opportunity. That's how I've told people. I mean, you can actually take profits and push them into the equity markets. You don't want to sit on. Stay invested. I mean, I'm not saying you should sell everything out. Of course, stay invested. Time in the market will always be time in the market. Stay invested, but have some dry powder. You can put it in fixed income just to while you wait out the Dangote listing. Then towards the Dangote listing, when we expect a lot of retail FOMO, people would definitely, they don't have this cash sitting somewhere. So, I mean, someone who actually locked in for the OMO, guess what? He needs to wait for about 103 days.
Yeah.
Especially to really get the money back. So, and Dangote is going to happen before then. So, guess where they will go to? They will go to their equity position to trim. So, that would provide that dislocation that you can take advantage of.
All right, thank you very much. You've done justice to this conversation.
You're welcome.
Thank you. On that note, we come to the end of today's episode of Clockwise. Please do not forget to like, subscribe, and also put on the notification bell of this channel because of the amazing content. Now, if you want to be part of our community, there is a Telegram link on our profile page that leads you straight to our community where we have real-time conversation and make real-time announcements. So if you want to be part of it, there are exciting and innovative people there that actually have conversation with you about the stock market and other investment. My name is Providence, and do not forget that there is always a bull market in the stock market, and we are here to help you find it. See you again.